Hey everyone, welcome back to Corporate Decoder. Today, 21 Capital Incorporated, ticker symbol XXI, just filed an 8K reporting a new director and a move impacting their stock exchange compliance. And I am seeing a clear strategy shift here. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is bringing on new talent and seems to be solidifying its foundation after recent major investments. So what is the big news in this filing? 21 Capital Incorporated, or XXI, announced on the 5th of June 2026 that Paul Lalljie was appointed to their board of directors. This isn't just a typical board addition though. Mr. Lalljie is joining the Audit Committee. And this move is significant because it is helping the company regain compliance with NYSE rules. Remember, XXI recently saw a big change with Tether taking over a substantial stake from SoftBank. This kind of maneuver often comes with a focus on strengthening the company's governance and ensuring it meets the requirements of major stock exchanges like the New York Stock Exchange. Having independent directors, especially on the Audit Committee, is a key part of that. Now, let's look at how they are compensating this new director. Mr. Lalljie will receive a substantial annual cash retainer of $150,000 plus an additional $150,000 in class of stock of the company each year. This stock component is interesting. It aligns the director's interests directly with the shareholders, which is generally a good sign. It also means they are essentially paying for expertise with their own equity. This part is crucial. The company explains that with Mr. Lalljie on board, they are back in compliance with NYSE's rules for audit committees. Specifically, they needed at least 2 independent members on the audit committee, especially during this transition period after their listing. This isn't just a bureaucratic detail. It is about ensuring robust financial oversight and building investor confidence. Failing to meet these listing requirements can lead to serious consequences, including potential delisting, which we've seen play out negatively for other companies. For instance, when Radio Shack had multiple governance issues, it was a precursor to its eventual bankruptcy. Getting this right is vital for XXI's continued presence on the NYSE. The filing also mentions that on the 8th of June 2026, the company issued a press release. This is often where companies elaborate on the news contained in the 8K. It is likely this press release provides more color on the strategic importance of Mr. Lalljie's appointment and potentially hints at future plans, especially given the recent news about Tether's increased stake. When we look at the exhibits attached to this filing, the independent director agreement is key. This document details the terms of Mr. Lalljie's engagement. We already know about the compensation, but these agreements often include other important clauses about his responsibilities and the company's obligations to him, like indemnification, which protects him for certain actions taken while serving the company. So, what is the story here? 21 Capital Incorporated is clearly focused on strengthening its corporate governance. The addition of Paul Lalljie to the board and audit committee, coupled with his compensation structure, signals a commitment to independent oversight and compliance with exchange rules. This is happening at a pivotal time. Following Tether's major investment, it looks like the new leadership, potentially influenced by Tether, is prioritizing a solid governance framework to support future growth and maintain their stock exchange listing. In my view, this move is a positive step for XXI, addresses a critical compliance issue, and signals a mature approach to corporate governance. For investors, seeing a commitment to independent oversight, especially after significant ownership changes, should be a reassuring sign. The risk I am watching is whether this governance strengthening translates directly into improved operational performance and profitability, which is the ultimate goal. What I am actually looking for is how this new leadership structure will influence the company's strategic decisions moving forward. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.